Instant business funding up to $5,000 with no credit checks and up to $2 million and above, incredibly fast within 1 to 2, if not by 5 days. The application process breakdown I will be going over in this video without collateral and no hard credit checks, plus 0% interest for 6 to 18 months and up to $150,000 in business credit cards, if not more, up to $250,000. Hi, this is Michael with Viral Funding Solutions, and I'm an expert business loan broker, which in another word means I'm able to connect you with the best lenders and underwriters. I've vetted the best in this industry, and if new ones come up, I'll make sure those are best for you and your industry and what you're looking for. And without over-promising, under-delivering, overwhelming you feeling like, whoa, I'm exhausted, tired, I can't even rely on them. Are they trustworthy? They said this, but it really meant that. They bait and switch you. They're emailing you, bombarding you with a lot of emails. If you know, you know. And if you haven't, be very careful of who you accept into your own ecosystem. And so I won't do any of that. I'm very transparent, loyal, and I will be here along the way with you to make sure that you have everything you need. So as you see on that screen, and I'm moving it over, we'll be getting into some of these services, but I also want to get into the qualifications of a specific revenue-based funding service that I created content not too long ago on a business loan application, and I went through some of the qualifications, but now I want to show you guys even an on-screen, and I'm going to show you more services, so stick with me until the very end. I'll also be releasing a few things on if perhaps you're interested in stocks, perhaps you're interested in different investments and making your investment portfolio even greater than what it is, or you are just getting started and you're looking for a way to supplement your even own income, and you're looking for other ways of additional income or ways that you want to grow your own business even further. So I'll be sharing some of that. If you don't know, I have multiple businesses. I run a digital marketing agency, affiliate marketing businesses, and other ventures. This is my primary focus though, and I keep releasing content to you guys on business funding. So let me know where you are tuning in from. We are streaming live on YouTube. Give me a hands up. Give me a thumbs up. Give me a fist. Well, just don't do it intentionally to smack me. But if you're watching, please let me know what part of the world. Give me a hashtag replay if you're watching later on. This is spontaneous. So if those of you who aren't commenting and don't want to comment, I completely get it. I'm an introvert, so I get it. It's hard for me to trust others. You might be asking that of me if this is your first time. So I'd like to do a lot of writing. I know video helps you guys, and I've been producing a lot of content here. And so hopefully it's been helpful. So moving into things. Long intro. I know some of you will be like, just hang in there. So I won't speak too much upon Silicon Valley Bank. I know those of you out there who are questioning it can do your own research. I can give you guys a quick summary about it. But really, it's just a huge disruption, a huge influx of money having to be borrowed that they couldn't recover their costs, everything put into treasury bonds, anything put into the agencies. And how much money was put into there? The billions. And what they couldn't recover enough from, they had to outsource to find other capital to make sure they can cover their costs and pay other people on their withdrawals. People not being able to get enough out of to even cover their total payroll. The list can go on and on. This is a big story that I know very well. But again, I'm not going to focus on that in this video, but I may get into a little bit about how that can affect you. A lot of businesses are having trouble, even now, just taking out any kind of withdrawals, being able to liquidate fast enough or liquidate whatever they need to and convert their assets into other ways of being able to get funding if they need to use those. So I won't go too deep again into Silicon Valley Bank. I've already know this stuff. Maybe you don't, but it's something you can do quickly research on. And it opens up your world to a lot of things. But it could be something that trickles down to other banking institutions. I'm not saying it will. We've yet to see how this will play out, how other institutions that may be struggling, how are they going to recover from this, if anything, if it's anything that's directly going to impact them, if they are. That's what I'm saying there. But what I want to get into is the whole premise on the qualifications. I want to get into some of these services. So I think at this point now, let me switch into, yes, I'm going to go over here to this. So not too long ago, as I said, I made a video on the business funding service, the revenue base, and this is where I want to begin. So what I'm going to do first is I'm going to walk you through this revenue-based funding program first, where it's up to $2 million. We'll get into some of the things with the up to $5,000 here. with no credit checks. But let's start off with the funding services. If you already are an existing business owner with time in business, and I'll get into the startups and I'll leave you guys those options below in the description in time. On replay right now live, we are not. It shouldn't be in the description yet. But here, if we scroll down, this may look familiar, and I may move this out of the way by the time you see this document that I may have for you down below in the description. And if not, it's okay. But here it says for the revenue-based funding and more services. So let's start off with this one where, and I usually speak about the three parts of getting funding: cash flow or revenue-based financing. We're looking at the cash flow coming in, going out of your business. We're looking at the, oh, 1 second. I know some of you guys are in here like, why is it dark? And it may be on my side, I can see it now. I apologize for that, guys. I have my HP lighting that I usually have on. Now let me move back in here. Okay. So where we were at, we were speaking about how there are different types. There's cash flow, revenue-based financing. There's credit-based, where we're looking at your credit to help you get a loan, help you get installment loans, term loans, personal lines of credit. We're doing personal and or business credit cards. And that's a different application process of its own. And we can go into these at another time. We can spend a lot of time going over each and every one of these, but I won't do that too much. And then there's collateral-based. You have any kind of asset or assets. There's one person, and there's normally, I guess it's harder to in this market where people ask for, hey, can I give up a truck or trucks and trailers? Of course, we would like to see an equipment list, a fleet list, years, mileage, etc., all that information wherever you have it. But not every trucking or person who's trying to put those kind of trucks as assets to give them away and get lending on, will it work? You have to meet like certain revenue requirements, and it's hard for appreciation, depreciation. But that's only one way. There's other collateralized programs that I've been working on heavily. And so I can get into all of them. I was about to, but let's go back into this, and I might come back to that in this video. So for the revenue-based funding and more services, and this one is the one without being a startup. So for qualifications of the revenue-based funding without collateral, please read over this carefully, and all else from this point forward. The application is below. You're operating for profit. Non-profit does not qualify. You have a business checking account. It must be in the name of your business, not a personal account that you use for business. If you're using a personal account for business, you can go to the self-employed option below in green, which is the up to $5,000 option I'll be covering here shortly. And not transferring funds between personal to business, business to personal, that does not count. It does not count as stated true organic revenue. So if you're one of those individuals who has an account, whether it's online or a digital bank, a traditional bank, like a JP Chase, Morgan, Wells Fargo, wherever you are associated with, or if you don't have your money all in one bank, which is great to have it in multiple, as what we're seeing with Silicon Valley, but that's different. That's, based on a more niche specific startup, venture capitalist. And again, I'm not spending a lot of time. We're diverging now going into that. But so depositing from a personal account to a business is not counted as true revenue. We're not going to look at your $500,000, for example, you deposited into your business checking account to make it look like it. That does not count as true revenue coming from the business. That could be, but it's being put into your personal account. Or that money could be commingled. That money could be coming from vendors. It could be coming from a source of it being already wire transferred or electronic transferred, or in ways that it's not easily verifiable. But that's besides the point. The point is that you're transferring the online transfer checking to, and you're depositing into another business checking account. You can do it personal to personal. And if you have a personal account, I'll get into that in a moment. So back here, and there's more details I can go into the personal account. I could go deep into each and every one of these, but let's not do that for now. That does not count as stated true organic revenue. Does your online banking set up? These days, when you're working with fintech lenders, whether you are or not, they need to know that you have your online banking set up. Can you easily send us PDF statements of this and that? Can you easily access your portal? Can we easily verify if we're doing a bank verification decision logic link we're sending you, whether it's automatic or manual, and how you input information, or is it a funding call? And it has to be done that way because you're over leveraged. It's too high of a risk, a profile, the way it looks. Well, how are they going to ACH transfer? How are they going to ACH withdrawal? So for those of you in here saying, well, I'm getting money taken out of my account, I don't know how. Well, You know what you signed. You should be able to see that. And I'll be transparent with you in all this, how it works. 450 plus credit, although 500 plus is best, if not 550 for lower revenue, below 15K. But you can still get a look. So this varies per cases. But what I've seen in this market, you guys should have at least a 500 and above. 450 is the very least if you have strong revenue, like above 15K, even way stronger than that. But for a great reason, you went down under, and it's per case basis. Lower revenue, 450 minimum, but not more than 500. It's going to be very, very difficult. If you can't already make your own debt obligations, you're already sucked into these credit cards. Maybe you have other personal loans. Maybe you have all these things that you have been falling back on. How are we even going to lend you money? Even if it's just for a day, even if it's for a week that you've been missing other payments, that's enough to say we can't lend you. So you won't be responsible, and that shows you won't be able to pay us back. UCC liens, blanket liens, whatever, anything necessary, that's besides the point. So here, 4+ months is needed. There was a time where we would ask for, in specific lenders underneath the 15,000 in revenue per month, a lot of them would like to see 6 months time in business, but we can work with 4+ months in business if everything looks good, and we'll pull from the right lender. And so if you're a startup, you can go to the green heading that reads personal, business, startup, loan option 1 or similar. And I will go into that in a moment. So please stick with me. If you are a startup, I'll go through that. And you go through those below it as well. 3 months of revenue at least 5,000 plus per month with this service. And on your lowest month, 5K plus. And so again, the stronger the revenue, the better. Yes, a minimum of 5K, we accept you. But don't think just because you do a minimum of 5,000 or you had a low month of 5K. I get it, Michael. I had to do 30,000 this month. And then how about we look at it 6 months back instead of just 3 months? For a historical trend, like we look at when we do an SBA loan for historical tax returns, not always will we ask for that with revenue-based financing. In some cases where you get an A-tier lender, or let's say you already have funding and you're wanting another position or one after that one, a third one or so, and you're an A-tier client, and perhaps we've seen you have non-sufficient funds, negative days, or a few things, then the lender can come back to me and then request, or the underwriter, and then go, oh, yeah, Michael, they have these things showing up in their underwriting. And for us to allow them to get another second position or a third position or however they best see fit, if it makes sense, they'll say, hey, can we ask for the last 9 to 10 months or the last 6 months, 12 months of business bank statements? Because they want to know how it's looking from that point. But it won't always be asked for. A lot of the times, all you need with these are 3 months of bank statements, a copy of your driver's license, and a voided check. 4 months in California and in a few different states. But I'll go into some of this in the how-to part. We're going into the what right now. We're going to go into the how-to on the application, so please stick with me. Have at least 3 to 4 plus deposits per month. That is what's best. Yes, you can fall under in some cases, especially if you're a construction company where you have a reason why you were only to deposit less. Maybe you have a few contracts. Maybe the money isn't coming out as fast as you get the money in for subcontractors or whoever you have to pay off, because that's what happens in those spaces. And then in other ones as well with Amazon, digital businesses, e-commerce, you can see that a lot in other ones as well. So 3 to 4, we give you guys a minimum. When you have lower revenue, sometimes the lender would like to see at least 4 plus. They'll sometimes say you can't have less than 4. You have to have at least 5 or 6 plus deposits per month. And this is where it becomes tricky. And I want to say this, and I'll get back. Very important. Oh, if I didn't say this, description down below, I'll have all this information for you. There will be a questionnaire you can fill out where you can get a very personalized and customized email response on your best funding option and options. If you have already and you filled it out and I've submitted it back, you should know, or I'll remind you. And if I haven't, I'll get back to you. I do get flooded. For those of you who know, no, I will get back to you. Please don't bark at me or don't do anything like that. So what you need to know, if you're depositing infrequently already as it is, you know, and I just started thinking about Silicon Valley Bank, about a situation on depositing and a few people on that, but I won't get into that. I said, again, I'm not going to get into the what happened here, why did it happen there extensively. We covered a little bit of that earlier. But what happens is when you don't have the right depositing frequency into that business checking account, even into that personal checking account, if you only get a service for that, what happens is when you're getting these term loans or these cash advances in this industry, the revenue-based ones are not traditionally bank loans. You can't associate always an interest rate with a lot of them. They're based on factor rates or based on future receivables. So what you'll make in the future, you pay back a portion of that. And it depends if you get a traditional or you get an untraditional. And these are usually called merchant cash advances, or there's a hybrid cash advance. And those are blended with hybrid cash advance term loans of 12 to 24 months. But realistically, they are all cash advances to a big degree. The majority of them are. And so they're based on factor rates between 1.19 to about 1.55, depending on your category of revenue, depending on your credit and other things like background, other things we'll look at. But besides going into the factor rates, which I might touch upon later, that's a whole nother, these are all segments of their own, by the way, that I've covered before, and I cover them very deeply. But the thing is, if you're already a trucking business, let's say, and you can't make 3 deposits to save your life at the end of the week, you can only make 1 or 2 deposits. And that deposit is infrequent, so much so that you're not depositing it every single day. However you get paid or however you deposit, if you're getting taken out daily about $79, $79 to $300 or so, whatever dollar amount per day, can you afford that? Of course, we never give you something that you can't repay back, but you as the business owner need to understand your finances. You as the business owner really need to understand your return on your investments, activities, and financially. Understand that balance sheet. Like Silicon Valley Bank, the people who were managing all that, who was managing the balance sheets? If I were to look at that stuff and I know how to read them, yeah, you could see losses. You can see, okay, why was this reporting the way it did? And you can track that back to their activities. So that's an activity return on investment. So somebody obviously there needs to be just, I don't know, look that very deeply, but that's not my job. And so when you're looking at all of these assets and liabilities and you're trying to make sense of it, I mean, these are things that I do. And so when your depositing frequency is low, like on bank statements, we see all this, I look at all this, and I see, okay, depositing versus revenue, what are they doing now? They only deposited it once during the week. Why is that the case? There's reasons for it. I can communicate that with you. Oh, okay, that's the reason. And I'm like, oh, okay, I've seen that. It's fine. I get that. But maybe you don't. And so you are infrequently depositing. And so paying back something as little as $79 to someone who's specifically not in the restaurant or retail space, because those are usually doing credit card transactions and credit card deposits, those payment processing ways where they're allowed to do that more frequently. You are like, well, I don't know if I'm going to make $200 by the end of the week, or I'm going to deposit $200 by the end of the week. That's little, but still, for many business owners who are just getting started, or they've gone backwards because of COVID and many other things that are out of their control, or for many more things, it becomes more difficult and it becomes a liability. And so with that case, I can see it being an issue. So we have to look at a derivative, but do you qualify for other things? Sometimes you just need the money because you need to take a temporary setback to go forward. So what you need to look at is the benefit exceeding your repayments. And what we're going through, the benefit has to exceed your repayments, no matter what. If you can't take this money and it becomes good debt, it becomes bad debt, but then turns into good debt, where are we then? Do you have to take a temporary setback to go forward? Or is it purely good debt you're using to grow your revenue, your gross profit margins? Is it going to help with your net profit? Where are you going to be then? If it doesn't, it's okay. It doesn't necessarily need to always impact that. And it doesn't have to impact it right away, but you have to understand your gains and you have to understand your losses for what you do. Double, triple, quadruple your money by taking, if I took 20,000, I'm turning that into 40,000. Pay back 27,000. Okay, baby, I'm paying back 30, or I'm making 40,000 out of that 20,000 that I turned it into. Good. Profit. I'm making money. And how long I'm doing that for is another question. So let's go back into this. We took a little bit of time on that. So make sure you're depositing frequently. So that's the difference. And if they're shorter term, you have to look at maybe a longer term if you can get approved for, and it extends your repayment. So even if you deposit less, it extends the term. It extends that, and it can drop the rate. So it allows you to make those payments. And if you already are drowning in other kind of debt, mortgages, other kind of payments you have going on, other loans, so you got to know what you're getting yourself into. You're depositing your funds, and we're here now, into one primary business checking account and not transferring with multiple accounts over and over again, which looks suspicious, and it is hard to track, especially of those of you who are doing the online transfer checking. If you see that, and I see that a lot, and comes from like a vendor or similar, and if it's not verifiable, it's hard. And then it wouldn't be counted as true deposits and be stated revenue. If you have multiple business checking account transfers, then we will have to look through them all. But also make sure you apply with your with your highest revenue account. That's the one we will look at. I don't want to hear this whole, can we then take that money and then deposit it into a Navy Federal account? Can we take the Chase account and then deposit it into the Wells Fargo? Because the lender is giving you that money and they're looking at the account you went in and applied with. Now, what you do with that funding once you have it, whether you decide to move it or not, that's up to you. How you should disperse that money, that's on you. So what you applied with, if you have a recent new banking institution, and we'll have to look at those bank statements, we'll look at those. So if you have bank statements that with different banks, then we will need to look at least 3 months or 4 months, depending on states, for each bank account, and you want to apply with your highest earning bank account. No more than 5 non-sufficient funds, NSFs for short, or negative days in any of the last 3 months. Example, bounce checks. There's many other ways, but non-sufficient funds is what gets people. Negative days, too many of them, or that's what'll get you. So when people ask me, why didn't I get approved? Well, you have too many reporting negative days. How are we going to allow you? You're overdrawing and you're doing all of this stuff now that's eating up already in your cash reserves if you had enough or any. And so how can we know you'll have enough money by the end of that week, by the end of that day to pay us back? That's the question in mind, always, that the lender, myself, the underwriters are always asking. How will you have the money? Do you have the money to pay us back? We can't be betting on just because you say you have a business plan, you're doing low revenue now, that in 3 months you're going to have 40,000. That's great, but we're not going to lend you on getting 40,000 just because you tell us that. We have to look and see what you have. If you're falling behind on any merchant cash advance or cash advance hybrid derivatives or similar for like a week or so, you won't qualify. That's just the truth. It's not here to bash anybody or tell them that, hey, you don't deserve this. It's just you won't qualify. Current loan consideration. If you have a current capital advance, the amount you still owe will be taken into consideration, and it can cause a reduction in your approval amount, and will do. More funds, second to fourth. I've even seen people go up to 5, 6 positions. But here, once we start going into too many positions, guys, man, those are normally not used for growth and expansion at that point. They're used to pay off other loans, or you may be growing so fast. Like I help out a lot of people and I hear the stories that they've been growing so fast that they needed to get more positions and they just had to. And as long as they know that they can make the payments on them and can pay it all back and they have a plan for it and it makes sense, okay, may be available. If you have an existing cash advance, it will cause a reduction in what you can get. And if you had more positions, you may not get anything at all. This goes the same with all business loans. But if it is idle that you have only, then it's okay. They are not correlated and considered and shouldn't cause a reduction within this revenue-based field. They're separate. Even when you have an SBA idle loan and you're looking to get an SBA 7A loan and multiple of those, they shouldn't factor in. Consolidation, for example, we can either give you a second position if you don't already have one, or maybe I say third position and we do some number crunching, where you don't have to pay off your first one, or we give you a large loan and you pay off your first and you net the difference. So I can go into the subject deeper, but I want to keep moving because of time. And this is stuff that I can explain to you in even more time, but you're essentially paying off that first position with the second position and you're netting the difference. You're keeping the remaining. When we get more positions, when we get you more funding, we have to see what the existing balance remaining is on the amount that you in total that you receive for that specific lender. And if there are others in play, we'll look at those as well as a total, but also individually for them. Not have a default with another advanced loan company, regardless of how long ago. You usually don't get more funding in this industry with a default. There's like 1 to 2 lenders that I know who may, and we've done it before, help you, but you'll start off with a lot less if you get any at all. There can also be a default with a judgment in place. You don't guys want to go through a court order, do you? Or if you know. Doesn't make it any better. And when you default on a lump sum, no lender will lend you lines of credit. So don't think, hey, Michael, or you kept it from me. If I didn't ask, that's one thing. But if you kept it from me and I asked you, did you have any defaults? And it goes without being said. If I've defaulted or if nobody's educated you that, hey, it lasted like 20 years ago, or this is when it happened, I should be able to get one now. That's not how it works. And when you default on a lump sum, no lender will lend you lines of credit. Background checks. If your background report comes back with a criminal record or past financial issues and past UCC filings too, then it can be an automatic decline depending on those UCC filings, how long ago, what's been there, what hasn't been there for some time. But we may be reasonable if it was in the past and you've changed your ways. I work with a lot of people who have criminal backgrounds. And I got a rush right now because a lot of you learn your lessons. Some of those maybe not, but when I hear these stories of where you've been to where you are now and where you want to be, it's so inspiring. And it's a story, one, but two, if everything else matches up, a lot of the times the lender with the right one, not all of them, will say, yes, we've seen them. We've seen how they've changed their ways, what happened, how long ago it happened, what was reported, what wasn't reported. We look into that. And they might have to do a hard pull for some cases not. So a lot of this is with soft pulls, but what happens is they've changed their ways. So now we can work with them. Their revenue, they've shown past debt obligations. They've shown us with these trade lines. They've shown us with other loans, car loans, student loans, mortgages, etc. Or they've taken out other loans in the past where we go, they took out this amount and they paid this back in how much time? Okay. They actually got rid of it fast. They had this much time. This was done at this time. And then they go, okay. Then you're more of a lendable client. You have that foot in the door and they feel more less pressured to lend you. And I would feel the same way. Not used for real estate investments. So like fix and flips, rentals, etc., passive investments, you can use, and I'm going to get into this service, you can use the personal / business / startup funding for that in the credit line hybrid that I'll go into in a moment. So please stick with me, that you can see later below. And or we can go through traditional real estate financing through private lenders with my real estate specific form, which I'll show you again. So what this is, it's you cannot, when you're looking for revenue-based financing, you don't apply it towards passive investments, towards a home, fix and flips, Airbnb, rental properties, a new construction project where it's going to be rented out. In a lot of cases, you're not selling it right away, you're holding on to something. But you can even use this as a home builder if you're going to construct a building, or if you're just using it as getting the supplies to help build it. There's some instances where we can do that. People do come to me who are home builders, who are in that space, who do get it through revenue-based financing for other working capital needs, for other expansion projects, etc. Also, not have issues with financial fraud, past default and past default judgment in place, submitted altered bank statements to another lender. That is looked down upon greatly. I don't have to tell that to you guys. You guys know that any kind of financial fraud will result in an automatic decline. I shouldn't have to share that with you. You should know a lot of the times you do feel guilty or you feel embarrassed to have to share that. And I get it. It's fine if you didn't. But at the same time, be transparent with me. You know who you're working with. And I won't share that with anybody else. And I'm not going to be looking down upon you and I'm going to be bashing you or judging you. I just want to make sure I have the clear answer. So we're not wasting our energy and time going to a lender, and then I only find out that you got disapproved, or you were like, why did this happen? Or you were so energy and time inefficient with me in ways that you couldn't even have imagined. And it just was like, I spent all this for what? And I got to know the person. That's the best part. But at the same time, it's like I look back on it at the end of the day or the end of the week or a month or whenever, end of the year, and I go, this is what resulted, and it shouldn't have been that way. I shouldn't have given them that energy and time the way that I did. What other cases it makes sense. So application, before you get started with your application below, note, when you click the link below, you'll click through the navigation tab that reads business capital, and then you'll click on the green apply now. So let me do this now that I'm here. To get started and go through my partnership that I have there to get started with your application below. And it goes more than 2 million. There's collateralized programs like asset-backed and or developable land that can go up to 50 million and even beyond that. So if you're looking for asset-backed, I'll go into that in a moment. But just know that I have this exclusive partnership with the best lenders and underwriters that we go to work for. Once everything gets submitted, we go through review, and then we'll go find the best lender for you. It's better to do it that way in this market than to do it as, let's say I'm going to go apply directly to that one lender who I already have that direct partnership with. It's better to do it in an in-house, so there's more flexibility or early payment discounts, more velocity, better underwriting guidelines. Everything gets done more fluid. Yeah, I was trying to think of fluidity, but I don't think it makes sense in that sentence. So bear with me. But yes, we can be more fluid in those underwriting guidelines, be more versatile, and allow for more room, as opposed to me taking you always to a direct lender that I already have. And I'm like, okay, it's best there. When you do it through an in-house where I already have those direct lenders, where when everything gets put through our system, we're able to then review, myself, my team, and everybody, and we can go over there to find the best lender, the best provider, where we're saying, hey, we want these 2 to 3 for your construction business, for your medical equipment business, and we have the best. And we go, hey, we want this one, but we're going to try to entice these 2. When these 2 come in, then they're going to see here, and then they're going to want to come in. I got them 80. No, I'm going to get them at least 100, 120,000. Better rates, better terms, early payment discounts, all this. And then we know for sure. So it's a great way of being able to know your options and not just saying, hey, well, that one person is what I want. Because a lot of people, when they do that, they get declined. A lot of people who don't, they don't get maximum amounts. The relationship isn't there. That's why it's best that you go through a business loan broker, a consultant, somebody who can pair you with the right person. So let's go through this again. So our amounts here, they go up to 2 million and above. It doesn't mean you'll get that, but it just shows what is available. And I go here about how it works. Excuse me, I'm not going to go through all this. I'm going to leave it down below, hopefully. If not, it's okay. But I'll leave it there, perhaps, and you can see all of this, give you guys some examples. Of course, it depends on the file. That's why I recommend you fill out the questionnaire form, but you'll get an idea. And then in the questionnaire, I can better position which funding service is best and how to get started with them. Usually there'll be an application link there to begin with, some business funding scenarios with numbers, depending on your file. And it could be more customized as well than these are. But I showed you here that I have a recent lady who took out 600,000, doing 300,000 and above, took 150K. And why did she take that when she could have taken more? The underwriting guidelines, the rates, it's very standard and it's the best that you're going to see. And click here to get started. Here's the self-employed, and I'll get into the application process in a second. Thank you guys for sticking with me. So self-employed, 1099 gig worker contractor funding, where you can get up to 5,000. So this is an approval between 20 to 25% of your monthly revenue. Usually we look at your lowest month, and you don't have to have a business checking account. You can if you have one, but a personal checking account is fine. Usually there's no credit checks or credit score requirements. It's such a lower amount of an approval, and we're helping out the 1099 gig worker contractor funders funding on that side. And if you are like in the trucking business, if you are not necessarily that, we can still have a look if you're doing less in revenue. So average pricing is 1.39 your dollar amount. It can be low as 1.2 and as high as 1.6. So what that necessarily means is, let's say you got 5,000, we take a multiplier of associated to your rate of your risk assessment. We look at credit, we look at term, we look at everything. And so we were determining that the lowest, let's say we got you 1.2, but average is 1.39. So 1.2 multiplied by 5,000 is what you would expect to repay back. So for this example, you get 1,000 on the 1.39 average. You're paying back $1,390 on average. And typical terms, they're 8 to 10 weeks for this specific service. For the one we saw before, usually it's 4 to 24 months. And I want to level with you guys here, and I'll let you guys go shortly. So the revenue base, the first option that we looked at before, we're looking at this one right now. These are 4 to 24 months. They're usually daily, weekly repayments. Now, I know a lot of you in here, oh, I don't want daily, weekly. If you were here listening to what I said earlier about the depositing frequency, the type of business, is this the only thing you have an option to? It's not necessarily bad. It's the person who uses that money. How do you use it correctly to fund your business? How structurally built from the foundation is your business? Where are you now to where you want to be? Cash flow. Where do you want to be with net profitability? Where do you want to be with your expenses? Where do you want to be with gross profit margins? Where do you want to be of cost of goods sold? Where do you want to be with all of these little components? It might not happen today, but it'll happen over time. And so daily, you can micromanage your payments instead of a monthly where you already have credit cards, you have maybe other loans. You're like, well, that would add an additional 4,000 to the 6,000 I already have. At the end of the month, I'm paying back 10,000 in total. I'm over leveraged. I can't be doing that. I know that in a month's time, I won't be able to, I'm going to go backwards with my credit. I can't allow that payment to go through. So you got to think about these things and you go, okay, well, daily, you can micromanage what goes in and out of the account. I have business owners who literally cash flow heavily, and they still go, I want a daily. I give them an option of weekly, and they go, I'd rather do daily. And it's standard, and it applies to them. And then others who go, I'd rather take a weekly repayment. You can micromanage that as well. Bi-weekly, monthly, there are some, but it's very rare and hard to get, especially in this market. So even if you have stronger revenue, a lot of the lines of credit, lump sums you see right now are distributed bi-weekly. To get monthly, very, very hard. And it's like not only a 750 plus credit score, better like 800, the highest. Better to have a high cash flowing business, like millions upon millions in annual revenue, 6+ figures per month. But even then, it's hard. And we have to see what kind of track record do you have? What have you paid already back in the past monthly? What have you been doing? And even then, it's still hard to lend on that. Even if the market were to slow down, it's not a traditional business loan, but it's fine. You can micromanage. And I would prefer that anyways, as opposed to having a huge lump sum, not defaulting on that, not being able to have a past default judgment in place and going through all these issues and UCC filings and personal guarantees. And now you're just drowning in a lot of this. So personal guarantees are also involved. They normally are. It's fine. I get it if you're having issues with credit, but personal guarantee, I'm not going to get into the whole details of that. It just speaks for itself. Be accountable, be responsible. Don't over leverage yourself. So back to this topic. Let me go back into here. Okay, so what I want to go into now, since we went over these two, is the application process to some of this. So here you'll get more where you can get started. What's the requirements for the $3,000 monthly revenue, non-W2 revenue, although we can look at a few things. 3 months time in business, proof of 1099 bank linking to check, 100% automated and very safe and secure process. Plaid is a linking company we work with. 4 deposits per month minimum for this one, non-W2 income deposits. So that's what we'll look at. And I know, like I said earlier, different deposits for different lenders. But now let me move this screen over, full screen. We'll close up in a little bit, but let me go over the qualification or the step-by-step process. And I'm seeing this on another screen, and I'm going to go through it very quickly. And a lot of the time, certain lenders and certain organizations, they don't necessarily don't like you showing who they are. They will, but to some extent, some of them want to be more exclusive. Some of them don't want to be the common in the room where, hey, everybody's showing us. And because a lot of the times it's not presentable as best. And sometimes they tell us, hey, don't show this, don't show that, but it's very safe. It's very legitimate. I brought people through all the time. Excuse me. And when you go through this, you'll know what it's all about. But I'll leave this more in the information down below in the description. So on this page that I'm looking at on my other tab, and I'll navigate you through the process, you'll go through the business capital tab. Not sure why my nose is getting itchy. I apologize. But there are a lot of different parts of the navigation, from business capital all the way down to payment processing. You have lines of credit, self-employed funding, equipment funding, asset-backed funding, employee pay advance, ERC, employee retention credit, and then payment processing, and more if more develops. So here, you're going to go to the business capital tab. And on this page, we want to help fund your business's growth. When your banks can't help, we can. How it works. And then you're going to see an apply now button. And all of this stuff, we'll see on our back end. So qualification is simple. You can see more on that page, but it won't give you everything that I have more already or less covered already on this video with the qualifications. And if there's anything that changes, you'll know about it. But we also have a meet or beat guarantee. So what that really is, you can get a $500 gift card. Let's say if you have an offer on the table, and you came to us with that. We have to verify there's a contract, how we verify that you have that offer. Okay, can we beat that? A lot of the times we do. I've seen people, and I've had stories of people where they came to get approved and they recently took something else out. So we get somebody approved $93,000 if you heard the story. And now they were dropped down to $15,000 because they took funding somewhere else that they probably shouldn't have done. And then now they dropped their offer. So even at a different scenario where if you say, let's say I got $80,000, can we get you approved for more? A lot of the times we can. Better rates, better terms. A lot of the times we can compete and usually beat. And now if we weren't to, we can give you a $500 gift card guaranteed. Simple. And with these exclusive partnerships that I have, I've vetted and I've seen different institutions and different organizations and how they work, and nothing is very comparable to this. And the stuff that we are able to do in-house and how we look and service and help you, and we're very transparent. So that's a part of it. Now let me go back into this. Simple and fast, small business focused, top-rated providers. You can use as you choose those funds and how you decide to. Fast decision, 1 to 2 business days, as much as 5 days, depending on the file and how fast. And I'll share this with you when I'm updated and I know what's happening along in the process. Qualification is simple. Time in business, as I said already. If you're in Canada, we could do Canada as well. There are different qualifications for it. I may leave a post down below if it's not in the one we looked at earlier, the documents. Then I'll have a separate blog post where you can go in there and see the Canada. You can control F if you need to, and then type in Canada, and it'll take you down to that section and you can learn more about it in the qualifications. So Now that I'm off this page and there's more details to it that you can go through, origination fees, usually 0 to 5%, faster funding here. But there's some examples that we put together for you that you can see there. But cost of funds and the origination fees is what we would take away from at the final amount. So here, how it works, apply now. Now I'm on that page. You guys can't see right now, but I'm going to walk you through this. So on this page, we have our meet or beat guarantee, and I'm in my partnership here. Step 1, you will apply. You will complete the simple application. You will be done in minutes. So what I'm going to do is I'm going to put this in the comments for you guys. Give me 1 second. Perhaps I should have done that earlier. There it is. So you can follow along. That should open up an external tab. But step 1, you complete our simple application and you will be done literally in minutes. I've helped people go through this process, and you normally don't have to reach out to me for that. It's very basic, and I'm going to go into a little bit of that. But you'll want to enter here on the front end your name required, first and last, your company name, and then mobile required phone number, email required. The country required is the United States or Canada, and if maybe there's more that changes, but that's what we have it at. And then underneath that, you should have my information auto-populated with my name and my agent ID, etc. But if not, I may leave it down below in the description, but I'll go along in the process. We'll review things, we'll look at things, and we'll make sure everything is where it needs to be. Step 2, you link bank or upload statements. Sorry, I had to move something. Depending on the funding type and the amount, you will be approved simply by verifying and linking your bank account or by uploading your bank statement. So depending on the lender that we navigate you to, so this app sequence is unlike anything else out there, where literally will be taken through an app that you can select from different options. It's very safe, secure. Lots of people every day submit it. Now, who gets the funding offer and who takes the offer is another question. But be serious, guys, and don't waste my energy and time on this. I don't pressure anybody, but I don't want to see submissions being half ASS, if you guys know what I mean. Or I don't want to see somebody who becomes unresponsive to a point where it's just bad. I've had people who have offers who say something, they do another. Don't be that person. And so nobody's got time for it. But the thing is, when you go through it, you'll be able to select from different options, your credit. Then you'll get to a page where you can select what kind of funding you would like, a line of credit, a term loan, a cash advance. And for specific scenarios, it depends on what you bring to the table. But we can try to do a combination of the line of credit and the advance/term loan, but not for everybody. It has to make sense. I can't just give you a line of credit if you have bad credit. And even though they say minimum credit sometimes, the credit right now in the line of credit space, it's just so difficult. It has to be like 40,000 to 50,000 per month, if not 30K, depending on the industry. So 400 to 500,000 in annual gross revenue for specific ones. You see about 750,000 and above. And even then, it's not a guarantee. But revenue has to go up. Credit has gone up. Time in business has gone up too, and to certain businesses. So let me go back into this, and I'll answer you in just a second, BWick. Appreciate you. Thank you. From Irvine, California. Nice. Yeah, I used to live in Orange County, California. So in the Garden Grove area, so not too far away from Irvine. I traveled up there sometimes, went out there to the mall, went out there to hang out, watch some movies. I saw the name. I just had it right now too. Avatar in 3D, IMAX. It was pretty cool. Went there with some family. So over here, and that was the first one, by the way. So over here, we'll continue going on, and I'll go into the comments again, and I'll answer you. But step 2, again, like I said, you link your bank or you upload statements. Usually you're going to upload your statements. And so again, we're going to ask for those 3 months of bank statements, copy of your driver's license, and a voided check. 4 months if in California, if in a few different selective states, because there's new disclosure laws and a few things. And just so you guys know, I'll make this in certain states like California, and I'll tell you as we go along, I can't necessarily get the bank statements and the documents always sent to me via email or how I ask for them, but we will be able to have you upload them and we'll see them there on our back end. So I can't ask for them and collect them and view them that way. So making sure that you go ahead and put them into our internal team for them to look at in that case, that would be most appropriate. And it's because of new disclosure laws, Utah, California, a few different places more are actually coming up. And it's just for every independent business loan broker. Okay, that's just how it works. Now let's go back into this. And for other ones, it's different. So here, and if anything changes, I'll let you guys know more of. So yeah, you're uploading it, safe and secure. You can have a save link if you haven't submitted it, and if you're missing something or something happens. But there you go. Step 3, we receive your offer. So we're going to be reviewing your file, myself, my team, and everybody, and making sure that everything is underwritten correctly. And that when we get to the next stage, we'll let you know with the notification email, usually, hey, we'll look at your documents, we reviewed, and now we're sending it out to get you the best offer. With most fundings, you will receive an instant offer on screen. With larger fundings and lines of credit, you will receive an offer via email within 1 hour to 1 business day. So it's very quick, fluid, in and out. Step 4, share the great news and you can save money. So this is our Connect Cash program, where if you decide you want to pay your funding much faster, then you say, I can save not only on interest, I can save on the principal. So if I can refer another business owner, is what you want to do. You can refer someone in your network or someone else, and you want me to work with them, I can do that. I have a lot of people who send me their clients, and I'm very humble and grateful. Never take that for granted. And you have to ask yourself of other people on YouTube and other people on blogs. Yeah, they may be revealing how to get a business loan, how to really get to understand how well they know their stuff. Ask them deep questions. Ask them more. Are they just an influencer who's getting paid on being an influencer on part of a platform? Because guess what? I'm not doing that, or at least now, or will be. But the thing is, it's a fine line to understand who's the right one and who's not the right one. And so you're playing this guessing game. And certain people, I'm not saying what they say isn't right. Don't misconstrue my words, but to how much depth or how much credibility do they have? What have they done? What else can I do to know that? What else do I need to know to move forward? Not just they just prop a link underneath and then just say, hopefully you will go and apply, and then you go through. I wouldn't want to work with someone like that. I'll be very honest with you. I would never give my business to somebody like that, now that I know all these things. So step 4, share the great news and you can save. And you can get 2% on all fundings if you refer somebody else to the service. Oh, sorry. There's not another screen there. So that's a different one. So you can earn 2% on people who receive funding and then 1% on all employee retention credit. So it's this big family that we put together where, hey, you send me somebody or you get a 2% on that client, or you decide you didn't want to do that. You send somebody directly to me. I'll give you a percentage of it. And I'm very reasonable. I won't go through all that right now. But a lot of people send me their clients. And it's like, I'm very grateful. Literally, I am. I'm in this position because I've been doing this for a while now. And I work directly with those lenders, with those underwriters. Even if it's an indirect brokerage, I still work with them like that. And they know when our files come in, they go, oh, that's Michael. Hey, that's him and his team. That's okay. They're going to look after him. As opposed to maybe another person submits it underneath the same lender and they go, nah, it's a good file. It's just, I know better over here. I know what I can do for them over there. There's so many different ways. So I'm going to close up here with this last part. We just went over step 4. So you can save money, pay it off cheaper, and help out other people in the process, stimulate their own businesses. Good question. What type of monthly revenue does a lender typically need to see for a $50K loan? Good question. I love that one. So it varies per service, of course. If we're doing, like we're talking here, revenue-based funding, I wouldn't say you have to have, like when you're doing collateral based, I think you know this, or maybe don't, but we're going to get you equivalent up to 80, 85%, depending on what it is. If it's receivables, it can even be as high as 90% in some cases in the market. But what happens is you want to do somewhere around 50,000 in revenue. So I would say fall between 40 to, in a safety net, I would say 40 to 60,000 per month. Now 30, we're pushing it to 50,000. Because although it is up closer to 150% of your lowest or your average monthly revenue, we look at the lowest, we look at the average, we look at the two numbers and current monthly revenue, of course, and we make a better determination. Depends on every case, though, too. So when we look at that number, we go, it'd be better to be doing around 40,000 per month in monthly revenue and on your lowest month, not like 40,000 in average, and then you did 20,000 on your lowest month. Like if you did 20,000, 40,000 is a big difference. So that could be somewhere you might get 30,000 at most. You have to start off with that because we're being more conservative on what we want to lend you. And if that's the case, like if there's more into the file where we're like, you're negative, you're this and that, like probably going to only walk away with 10,000, 15,000, maybe more or less, if anything. So I hope that answered your question. And I could have said it in many ways, but typically that's kind of the range that I would be looking at. And we can lend between 1 to 2x your lowest, your average monthly revenue. We look at a few things, but sometimes it's 75 to 200%, 100% to 150. And lines of credit are usually lower approval. So, and we're going over a term loan here, primarily not a line of credit though. Yeah. Okay, so I was just looking over my other tab. I feel like we've covered everything, guys. I went over from the top. Let me go ahead and recap. Well, we went over the, let me move this here. We went over the revenue-based funding. Oh, that's what I wanted to cover. I said I would, and I didn't get to it right away. But I'll try to leave that document down below. 1 second. Let's see if I can open this. There it is. So there's more options underneath this. So online bank term loan options, they might not be most desirable for time. Maybe they involve collateral, the amount of funding you can get up to, and some of the other things that they require like credit. But here I went through this. And then down here, I have the SBA 7A for startups and non-startups, what it would contain and what you would need to have. Let me see if this is moving. Yeah. So I go into all the details on that part. And then down here, I will go into the business line of credit. If it makes sense, it makes sense. If it doesn't, it doesn't. There's some breakdown numbers that I've done here, and I can do it individually for each person as well. And then under here, we have equipment financing. There might be more business lines of credit, but for this one, I recommend in what's best in the market, what usually people can get approved to. Equipment financing options, I may have more than one on that. And this is why it's important you fill out the questionnaire if you have an asset-backed, asset-based, or collateral-based, you hear them, lending options. And then we go into this, different asset-backed. We have commercial real estate and or developable land. Then down here, we have cash out refinance options. That's a scenario we would look at in case you wanted to venture down that route. I know I've seen that with certain scenarios, especially with lower revenue clients, because especially in the construction space, if you have that, you can pull in an injection of equity out of real estate. Why wouldn't you? If it makes sense. If it doesn't, it doesn't. But there are many angles to look at it. So a few things I go over. Over here, I have the personal/business startup loan that we can go over if need be. And here's one of the options, my primary one that I recommend. And I have partnerships with many different lenders and providers. But from what I've seen, especially in the market, I'll guide you to the right direction, especially for your niche and your needs. So here it is. And I go over it. If you make it, if you don't. And there's actually an application to these. So you guys can go through them that I put here for you and view them and get started on them. Maybe it takes you to another external page before you go through and submit things. So just check that out. Personal funding, probably option 2, but it might not make more sense for credit issues, maybe other things involved, the process on what we can realistically get you and more. Over here, we have the credit line hybrid. And this is more of a business credit card stacking program. This can also involve the personal/business funding up above, but this one is a lot more targeted as well. And we can use this primary to other type of funding. So if you had high enough credit and we got you approved for business credit cards at 0%, the world is open now to then say, well, can we do a personal loan if you would want to, a term loan? Are those something you're looking at doing? Maybe 401k, a rollover to an IRA, moving to transfer to another account. But that's for another time. And I'll go over that in this document too. But there's that option, requires stronger credit, 700 and above on all 3 consumer credit bureaus. And it used to be like 680, but we moved things. Now down here, check for grant opportunities. I'll leave those documents. Equity crowdfunding, I'm helping out a lot of people with this, especially nowadays with the whole world of venture capitalists, everything you've seen through Silicon Valley Bank and people withdrawing and pulling their money from, looking in different directions. There's just so much happening. But different crowdfunding options, I'll leave other ones that are more regular that are not exactly equity crowdfunding. Venture capitalist options, other VC and angel investor options, ones like margin accounts for other options, financial guarantee bonds, stocks and bonds, mutual funds, fixing and increasing your FICO. You may need to do that. I'll leave those resources, the best in the credit repair space for sure, who's there and what works. Down here, you have building your business credit through vendor credit, revolving credit lines. I built that stuff out to help you guys go through things on that series. Business credit cards, you need to look more information. I have created content on that. Home equity loan, home equity lines of credit, where you should look maybe as a derivative or as an alternative perhaps to your own bank. 401k, IRA financing option, as well as stocks and what you can do there. SBA idle, latest help, employee retention credit. And so there are many other services, as I said here, SBA 7A CRE loans, other unsecured term loans, other SBA 7A options, and so forth, that I can show you in your customized questionnaire when you submit one. But these are what's best, and I wanted to pull from there to show you the best and what's best right now in this market for each individual industry. There's account receivables. There's all these different ways. If you haven't filled my questionnaire out, you may be able to click this link if you see this down below in the comments, and if not, I'll leave it in the description. So let me come back, and we're going to close up. Okay. So did you guys get value from this video? Hopefully you guys did. You guys understand now what it takes to not only get revenue-based financing, but some of these other credit-based, maybe collateral. We didn't go too deep into those. We didn't even go too deep into the revenue. I can spend a lot of time. Literally, I can have like a 3-day session on all this and divide it into 3 days, maybe sometime later on. But the thing is, the markets are consistently changing. Protecting your assets, being very careful about that, making sure you withdraw your money when you can in a timely manner, not waiting too long. And it's not always, again, it's a market condition, and it's something that just happens with, we spoke about Silicon Valley Bank a little bit earlier, didn't get too deep into it. But just understand your financial needs. Is it credit-based? Is it collateral-based? Is it cash flow-based? Is it a combination of two? All three? One? You only have one of the three? Or what is it that you have on the table? Like right now, I'm working out a lot personal loans, and I'm doing a lot of everything, honestly, real estate financing too. And the thing that I see commonly is, especially with the personal loans, where we can do unsecured financing and we can do secured financing in the term of line of credits and more. We have to uncover what's there and what isn't, and what's something you don't want to do versus what you want. And we have to be strategic about what we lead in with. And that's stuff that I communicate with my lender, and they know these things. And so that's why it's important for you guys to have somebody like me, unless you guys just go submit it somewhere else and directly and go, because I don't want to work with Michael. Oh, I'm not for you. That's fine. I'm not going to pressure you. But people realize it the hard way. A lot of them do. They come back and they go, oh, yeah, should have listened to you. I don't tell them. But the thing is, sometimes you have to learn your lesson. If you didn't want to learn it by learning from somebody else's mistakes and their lessons, then, hey, the ball is in your court. So hopefully you got value. We went over the qualifications on them. There's other ones, of course. We went through the application process breakdown of revenue-based funding. Of course, there's some for others, credit-based collateral, intake forms, and things on the personal side. And I can share those with you. Of course, they'll be in that document if I have it down below. But if you did get value, please share it with others who you feel will find value from it. It can be a complete stranger, a friend, or a family member. If you haven't subscribed, please go ahead and do so. And click that bell notification icon so you do not miss any future content I will be coming out with. And I think one last thing, yes, description down below, questionnaire, maybe this document I showed you today may be there. Other types of funding, new construction loans. There's so many of them. Real estate, we can go even deeper on that, fix and flips, foreign nationals, community advantage programs with the SBA, non-CRE, specific SBA loans, but more traditional. Business loan acquisitions, equipment, I do them all. And I know how they all work. And I know when some people think, you really do it? Yeah, I do. And I know how well I can do them. I'm very transparent. And I think that's enough. I'm feeling like I missed something. I don't think I did. I can go into each and every one of these requirements that I went into, even deeper, more specific. I can go into the terms more, the rates, medium to high. That's fine. There is no such thing as inexpensive money as soon as the rates will be going up to prime rates. But unless you have collateral, unless you do a credit-based program, you have better credit and so forth, don't expect to get these lower interest rates. And that's fine. Benefit exceeds the repayment. If you're going to start a business, for example, and it's not going to be the economy that's getting in my way, it's not going to be anything else but you who gets in your way, that's when you really realize, like, do I really have a concrete business plan? Do I know where I'm making my money? Do I know that if I took this money, how I would apply it correctly and what return on my investment? would be. That's what you guys need to sit down and look at. And again, that's everything. Appreciate you guys. Thank you for tuning in. Look down below in the description for that application. It may be there, documents and stuff like that that I showed you today and so forth. Appreciate you all. Let's have a great remaining rest of the week. It's a Monday that I'm making this. And I will see you all on the next one. Okay. Oh, stocks. I said I would come back to that. I didn't get into it too much, but this is not too related to business funding, but those of you who are looking at diversifying your investment portfolio and would like to have weekly, daily, even stock ideas, 6 or so, 5 or so, sent to your inbox, and that's something you would like to learn about, and you want to get in touch with the pros on this and people that I've been connected with and people that can help you understand the stock investment world and how to make different types of investments with no fluff from the best, I'm going to try to leave information for you guys down below on that. And it's about diversifying your guys' income. And I've learned that having multiple businesses and learning that you shouldn't just put it all in one and just learning. Okay. So that's all from me. Appreciate you guys for tuning in. I will talk to you all in the next one. Bye.